This week, all eyes are on the pace of a potential interest rate cuts by the Federal Reserve and the performance of the world's leading currency. The dollar is range-bound today in anticipation of the release of key US inflation data. Major currency pairs, stock indexes, and commodity assets are also in a wait-and-see mode. Consumer prices in the euro area appear to be on a sustained downward trend. In Spain, prices have fallen to their lowest level in a year, raising the prospect of a further monetary policy, easing by the European Central Bank at its meeting scheduled for September 12. This is particularly evident as the euro has dipped against the US dollar today, following data showing a decline in German inflation. Prices have decreased across all 6 major German states. Thus, today's inflation report for the German economy will almost certainly reflect a slowdown from 2.3%. If the next German inflation figure comes in around the predicted 2.1%, the euro is likely to extend losses. In addition, the single currency could also be affected by the upcoming elections. In the 3 eastern German states, 2 parties, the far right and the far left, are polling between 40% and 50%. The French experience shows that non-centrist policymakers can act as inflation drivers. To fully understand the impact on the euro-dollar pair, it's worth waiting for the release of the US consumer price data. These figures are closely watched by the Federal Reserve and may provide some clues about future interest rates moves in the United States. Meanwhile, the euro fell by nearly 0.5% after the release of German data. As a result, the greenback gained value. Throughout the first half of Thursday, the US dollar index, which measures the value of the dollar against a basket of 6 world currencies, held steady in the range of 100.80 to 101.40 points. However, for the month of August as a whole, the dollar has lost about 2.9%. On the US stock market front, Nvidia, the leader in artificial intelligence, failed to meet investor expectations. The earnings of the top chip maker fell short of forecasts. Its stock, which had soared 150% over the past year, plunged 7% in after-hours trading yesterday. This drop naturally dragged down Wall Street indexes. As a result, the S&P 500 fell 0.6% on a Wednesday and continued to trade in the red between 5,560 and 5,627 points on a Thursday. The euro's performance against the US dollar typically shows a strong correlation with the major US stock indexes. Therefore, the behavior of the euro-USD pair in the first half of Thursday is in line with the expected technical patterns. After reaching resistance levels in the 1.1200 and 1.1250 area, the asset has entered a correction phase. Currently, no drastic changes are observed, with the movement fitting within the expected rhythm of a bullish trend, according to our analysts. If the correction continues, the euro is likely to retreat to the psychological level of 1.1000. Even with such a notable decline, the overall bullish trend is expected to remain intact. For buyers to regain control of the market, the price will need to either reach the 1.1000 level and bounce back off. If it complete the correction and hold about the 1.1250 mark. Oil prices have also stabilized. After 2 days of losses, Brent crude closed near the $77 support level. This decline underscores the prevalent bearish sentiment among market participants. This is despite the recent drawdown in the US crude oil inventories and ongoing supply disruptions from Libya, which have kept buyers on edge. However, from a technical perspective, the signal of a price fixation below the $80 level has confirmed expectations of increased short interest. If the current downtrend persists, Brent crude could hit towards the support area of $75 to $75.5 per barrel. The dollar-ruble pair is also in consolidation mode, stuck in a range between 91.00 and 92.50 rubles. This narrowing range indicates a build-up of a trading momentum, which could lead to new price fluctuations. It's important to note that this consolidation is taking place at the peak of an uptrend, with no strong corrective move observed. Therefore, there is a likelihood that the current stagnation will be replaced by an upward movement. That's all for now. We continue to follow developments in the financial markets, subscribe to our channel and follow news with us. In the global economic chess game, every currency pawn aspires to eventually become a king.